Hi, this is Zak Mir with the US Chartbreakers for Thursday, May the 4th here at Zak's Traders Cafe. Starting off with the S&P as usual, where we've got the rising trend channel from October. It doesn't feel like it obviously at the moment with the failure at that August resistance line, bull trap through 4160. We're back now below 4100 and there's a risk of obviously a test of the 50-day moving average there around 40.40. But at least while we're above that, we're in the box seat, hopefully, for another attempt on breaking that resistance line from last year after the markets digested the latest Fed moves on interest rates. Moving along to the stocks, and most of these quite high flyers at the moment. Aptorum is the next one, first one rather, and here you can see that we broke our initial target there towards $5, above $5, looking for a new leg up as high as $9 maybe by the end of this month after the massive unfilled gap to the upside. But the key here it is holding the $5 area. Otherwise, obviously, there's a risk of the shares filling the gap and maintaining that ongoing negative trend. Stock which is in a similar vein in terms of being one of the risers is Aceragen, and here you can see that we spiked through the falling wedge that we had there from the turn of the year. That wedge line around $2, now closing near the 50-day moving average around $3, above $3 in the 50-day line, looking for a retest of the 200-day moving average, or a test of the 200-day moving average around the $5.80 mark, hopefully by the end of this month. But the key here really is holding near the 50-day moving average, and ideally above it. Resistance on the way down around $2.60, so that might provide a reasonable stop loss, especially given the way that we can see that pre-market indication near that level at the moment. Onto a stock which has been covered here before and seems to be doing reasonably well. Eyepoint Pharmaceuticals, that's the name of the game, I suppose. Here we had the breakthrough, the unfilled gap through the 200-day moving average at the end of last month. Current situation is that we're in a consolidation, basically trading either side of that resistance on the way down around the $8 mark, ideally above the $7 mark, i.e. yesterday's support area. We're looking for not only a retest of last month's resistance through the $10 area, $10.41 to be precise, but also a journey up to that one-year resistance line projection as high as $15. And maybe we see that by the end of next month while we hold above the $7 area, if we can do that. Stock which I've mentioned here quite a few times of late is Fuelcell, and here it looks like we're in recovery mode, still within that falling trend channel, but we've broken that falling wedge in place basically since the beginning of March, and above the $1.90 area, looking for the top of that channel there as high as $3.60 by the end of next month. If you're cautious, maybe wait for the RSI to get above neutral 50 before deciding that the momentum here is sustainable. The next stock is one which is certainly on the front foot at the moment. Harbour Custom Development. We had the spike there to the 200-day moving average. The target here as high as $17.50 at the top of that broadening triangle from December, and ideally we stay above the resistance line break there from February around $4.50 ahead of a move up towards the mid-teens. You see obviously the pre-market around $6, so need to hold that area and the 50-day moving average for the rest of this week. One of the stars of the moment, especially for the US Chartbreakers, is Immunogen. Here the shares doing what we would always hope we hope all the Chartbreakers would do, which is break a resistance line target. Here we had a target around $7.50. Shares already through $12, which is obviously highly impressive. And the view now is that we're looking for our next target on the upside. What that would be is probably suggested by the line I'm just drawing now. So up towards the $15 area from a summer 2021 resistance line projection. Maybe we'll see that by the end of this month if we can hold above yesterday's support around the $10 mark. So maybe any dips towards that area regarded as potential entry points. Moving on to Kintara, and here you can see that we've had decent traction near the lows of the range. We've got a broadening triangle there from basically the turn of the year, and broken out of that falling wedge above the 50-day moving average around $3.80, looking for as high as $9 by the end of next month, backed by quite strong bullish divergence there. So lower lows in the price, much higher lows in the RSI window, which tends to add momentum to a situation. Moving along to MiMedx or MiMedx, MiMedx group rather. Let's get it right. Here we've got a break of the old resistance from February around $4.80. Above that, we're looking for a resistance line projection from June last year as high as $6.70, and hopefully that can be hit well before the end of this month. RSI obviously quite overbought at the moment, but the momentum looks like it's there given that very decent close that we had for the shares yesterday. Just a few stocks to go now. First one is Mersana Therapeutics, which I have pronounced properly. Here we've got a broadening triangle there from August. Closed above the 200-day moving average around $6.10, and above that we're looking for $8. The main post-August resistance by the end of this month, helped along by the unfilled gap to the upside, which completes a bear trap island reversal from the beginning of March. On to the NantHealth situation, and here broadening triangle near the lows, breaking above the 50-day moving average around the $2 level, above $2, looking for $4.50 hopefully by the end of next month, backed by the bullish divergence that we have in terms of the last lows, the last price lows that you can see there in the daily chart. Going on to one of the better performers of the recent past, and one of a favourite here, I'd probably say as well, Pulse Biosciences. Here you can see the shares hit one target and beat it around $6. The next target was $8, and we've gone through that. And above $8, we are looking for, if I can get the chart back, we are looking for as high as the $11 area by the end of this month. So that would be the top of a broadening September triangle for the share. So above 8, looking for 11 on Pulse over the near term. Stock which was covered just the other day has come to fruition in terms of the upside, so a good move for the shares yesterday. Here we've got a situation where support's gathering above the old resistance around $3.20 from back in March, and the longer we stay above that, the greater the chance of a retest of a recent spike towards $9.20, hopefully by the end of next month. That's it for me today. More updates tomorrow.